Be a very scary place. Don't go wading into treacherous waters without your edge finder, which gives you market data like the commitment of traders data, retail sentiment, our top setups algorithm, which generates ideas each day for you, and so on and so forth. If you don't already have a copy of the edge finder, we're currently doing our summer sale, and it is our biggest discount of the entire year, no questions asked. If you're waiting for a better discount, you won't get it. Currently, the edge finder is half off, and for stream viewers who are watching right now, we're going to be dropping a link in the chat as I speak, and that link will take you to a direct message center where you can speak to a rep on our team. That rep can get you 55% off so that you're no longer swimming out with the sharks. Get inshore and trade with the edge finder. Check it out, and thank you guys for watching. Back to the show. All right, we're back with Chris. Hey, Chris, happy Thursday, man.
Happy Thursday. What's happening out there with you?
Not a whole lot. We got dollar giving back some of its gains this morning. I was just talking the last 2 hours or so about just the dollar index just being at 104 and cannot crack lower. I want to start here just for a second, get your thoughts on the dollar index. Are we going to see 104 break? What is making the dollar so strong at this level?
I just think that the market's not ready to run and price in the dollar weakness. I mean, look, 103.90 is my level that we're coming close. So August is typically this kind of transition month, and August also tends to give us these really sneaky breakouts. So I could see it being really choppy right around this 104 level, but the more that gets pestered and peppered and hit over and over, just don't be surprised that the dollar, especially with the rate cut cycle coming into the end of the year, I think that the dollar ends up going below 103.90 and we start looking for a decent run on the dollar. I've not been impressed with the dollar direction the last couple of months. This to me is nonsense because it's not really giving us a lot of good trades individually. You got to be in and out of the dollar for the last couple of months. So hopefully dollar trading gets a little bit easier. If we make a nice clean break below 103.90, to me, this is, sell the rallies and hopefully the dollar continues to trend lower towards the end of the year towards 101. That to me would be a pretty easy trade because as a basket trade, probably the currency pairs I like the most would be Aussie dollar long, New Zealand dollar long, pound dollar possibly having the resiliency. I might stay out of the euro dollar, but then dollar CAD looks like we could drop. There's more dollar yen potentially. Nick, I found something pretty interesting. I know you have to go here in a little bit. But I look back at the history of the Japanese interest rates because I'm like, you know what? I know we've been at negative interest rates for a long time, but how long, in fact? I mean, this for almost 25 years has essentially been hanging out between 0, -1, and like 25 basis points. So right now to go from -1 or negative 0.1 to 0.1 to now 0.25, we're still in this ridiculously easy, accommodative monetary policy. It's funny how the market's reacting so ridiculous to, hey, wow, they raised rates from negative 0.1 to 0.25, and it's reacting like the sky is falling. And so I mean, look, I still think there's more of this unraveling carry trade to happen on the Japanese yen. But do we think that the Bank of Japan is going to go raise rates to 1%? To 2% to 3% to kind of find these like other central banks where, if the US drops to 2.5% to 3% over the next couple of years, is the Bank of Japan going to be right there with it? I doubt it, but obviously it's going to be interesting how it all unfolds.
Yeah, that is. And you're seeing more downside right now for like things like UJ. Seems like the yen staying strong for now. And I think that the rate cut definitely brings a little bit of short-term strength to the yen. But what we keep talking about with this story on the yen is it is the global market trying to figure out if this is cooling in the economies of the world before rate cuts pick things back up, or if this is cooling in the economy that is going to turn into serious weakening of global economies. If you see serious weakening in the global economies, the yen's going to look like a golden relic. It's going to look so strong because then you've got a more predictable, kind of slow growing economy that, it's not very exciting in growth periods, but it sure is exciting to have your money, parked somewhere reasonably safe while the world's falling apart. So that's the question. And I'll say, Chris, I think I lean more towards the soft landing camp as you know, but I can see that the yen long positions could be an interesting hedge if you if, let's say we're just wrong, and let's say that the economies of the world really do go into a period of maybe not a complete, global shutdown recession, but if we enter into a prolonged period of not as much growth, not as much excitement, all this stimulus money, maybe all the fiscal spending dries up, or not dries up, but we realize that maybe the growth was a little bit, you know, what's the word I'm looking for? Falsely created. I don't know. We'll see.
Yeah, it
But
is
it's
fabricated for sure.
possible. Yeah, fabricated.
Yep.
Yeah, you could see an environment in which the global economy just doesn't see a ton of growth, and maybe the yen just looks like a little bit more stable, a little bit more, kind of a better option. But I'm not personally in that camp, but I can see the hedge idea that makes sense there.
Sure. Well, we'll see how the FXY does. That's
Yeah,
pretty much my hedge for right now.
I
And
like it.
if my stock from I've got to break even at 60 because I did protect the downside. Initially, when I got in this thing, it was down here around $57 or like $58 when I bought it. But because of that debit, and that debit lasts me out to the end of the year. So I thought, well, the Japanese yen isn't ready to unravel yet. I'll protect it. But anyway, so my break even $60. If we see a longer run, now that I own the shares, I take the options expirations out of it. If we run up here towards 70 plus, it's worth it. I mean, I'll make a few bucks on the trade.
Yeah,
I can still trade Japanese yen futures, which is fine. Currency wise, I mean, if I look at a pair, I think I talked to some traders this morning about this. Euro yen is an example in the near term. I have a fib drawn from this top to bottom. I mean, I wouldn't be surprised if anybody's lining up like a 1 hour chart to then say like a 15-minute chart. And if we start to see that this is stabilizing and then starting to show upwards, like an upward correction, all I'd look for is if we pull back to like a 38 to a 61% zone, that would just be the near term bulls correcting. But I mean, you can't ask for a cleaner technical trade than this. We took out lows, we took out lows, we took out the intervention we had back in April and May. If we pull back to a 38250 zone, I think this is a good spot for any type of buyer to be risk free or protecting some longs if you're going to get long. Or for the swing trader, I think the swing trader is just going to wait for this area, look for a sell trade, and see if we come back and retest the low. Stop loss initially above the highs, but then going back down to eliminate risk, get to the lows, and then see if this is going to continue to unwind. So I think there's good opportunities out again if you're paying attention. I don't know how fun it's going to be to try to buy this thing because it could be, we could all make a correction in one day, and then we look to see if that swing trade is going to be pushed back to the downside. So I'm watching the yen pairs. Like I said, for me, if I don't trade the yen, no big deal. I'll just stick with the FXY. But the dollar's a big story, man. I think that you got to look. I've been annoyed, like I said, about the dollar crosses the last 3-4 months. But if we get a nice clean breakout coming out of August, I think this like September to end of the year move, especially coming into rate cuts, the dollar could be a really nice trade. And I, for one, would not mind having a 300 to 400 pip move across the board. If you have $7 pairs and you've got 300 to 400 pips across, I mean, you're looking at a pretty good chunk of profit. Probably close
yeah.
to 2 to 3,000 pips.
I think again, if you're more in the camp of where I am, where I think that global growth is maybe temporarily cooling,
Hmm.
but may pick up. The U.S. dollar short trade could be really strong because
Yeah,
usually when we see global growth, the dollar is usually weaker, giving other currencies, emerging markets maybe a turn to, and that's overdue. That's a trade that I think we might talk more about in the future, Chris, because I know you're long China.
hmm,
There's also like emerging markets trades that you could look into. There's other places that have, the U.S. outperformance makes U.S. indices just so attractive, so interesting to everybody. But there is a longer term theme that might swing back the other way, which is other economies of the world might pick up the pace and really see their stock markets make some big moves. Could be
sure.
worth exploring in the future as you've got FXI. I want to talk more on this, Chris, but I got to hop off.
Okay.
I'm gonna let you take over here for a little bit. Guys, stick around with Chris. He's got some great concepts, great things to discuss. Before I step out, he's got his own YouTube channel, social medias. You can find him. We're going to drop the links to those in the chat right now. You can find him on Twitter. You can find him on YouTube. So please support our guests. We always ask that you do that. They come on, by their own will to come and contribute to the A1 Trading Show, and we couldn't do it without them. So, Chris, thanks for taking over. You got it from here, man.
All right. Thanks, Nick.
All right, man. See ya.
All right. Bye bye. Okay, there are a couple of trades I'd like to take a look at here. So, given the little drop we've seen, the markets have been pricing in some obviously rate action. So, if we take a look at the U.S. 3-month yield, okay, this has come down about 30 basis points. We've had a high around 5.55. We're trading at 5.27. What we are noticing with this discussion of the U.S. Central Bank, the Fed cutting rates or likely to cut rates coming September, possibly November, but seems like right now September, December are pretty high probability. November is like the wild card of are we going to get 3 rate cuts by the end of the year or 2? Either way, I think rate cuts are coming. We're starting to notice that the market's taking some action with yields dropping. So with yields dropping means that bond prices are going up. So I have a 1 to 3 year, the 7 to 10, and the 20 year. If you take a look at these are all doing pretty well to the upside. So SHY is heading up. IEF is heading up and TLT is heading up. I'm going to look at a couple of puts in these, and I think I'm going to go out a decent amount. So let me take a look at IEF here. I could probably just stick to like the shy and the TLT, the 7 to 10 year, or the IEF is the 7 to 10 year, and the TLT is the 20 year. So if I went out, let's say to the end of the year, December 20th. How low can I go to get some credit for this? So if I went out to, can I get something below like $88? Not, oh my gosh, never mind. If I want to go to a technical level that I'd like to put a put in, I'm going to get 5 cents credit. No thanks. Um, I don't want to jump in. I mean, I'm long TLT. We're sitting up at new highs. Here's my position on TLT right here. I did a debit on this one of $14. This is out to 2026, by the way, so I'm way out here on the bond situation. But if I show my position on TLT, I have an $82 call, and I paid $14.21 for it. Right now, it is trading for 15.75. So I'm up around $1.50 on this per contract, which right now in 4 contracts, I'm up about $400. My goal on this one, because it's uncovered, I'm not selling against it. My goal is to try to get this. If TLT can rip up here towards $100, then that would give me $18 of real value. Okay, $18 of real value minus the 14.21 that I paid. If there's any extrinsic value, maybe this is up to 18.50 or $19. But basically, let's just say I just do the math here, and I'm up about $3.80. Well, $3.80 with 4 contracts is going to be about $1,500. It's not, it's not like an awesome ridiculous baller trade. It's a nice solid gain. It's diversified like I tend to be. So I've got some holdings that, Nick said earlier, I'm in China. I've got some crypto with Bitcoin exposure. One thing that's been interesting is watching the difference between an IBIT versus a BITO. That's not me singing like Old McDonald. That's me talking about, these performances and these ETFs have been very different. So BITO, which I trade options around, is down to 2103. This does not look anything like Bitcoin. If you take a look at IBIT, this looks a lot more like Bitcoin. You take a look at Bitcoin, this looks obviously like Bitcoin. We're trading at 64.5 right now. To me, I look at Bitcoin where we had this little bear trap. We ripped up here. I'm looking for a little indecision. If we can hold this level and head higher, another thing that I think helps with the Fed cutting rates might be, Bitcoin gets a little bit of a surge to the upside. Maybe we're having this conversation with 100K by the end of the year or early into next year, with the rate cut cycle kind of taking full effect and seeing something where, what's likely going to happen with the new president, whether it's Kamala Harris or Trump. We're probably still going to have fiscal stimulus. We're probably going to have the Fed, if we're easing in monetary policy. The Fed might be also willing to backstop a couple things, which means we're more money printing. So gold looks good in that sense, and Bitcoin looks good in that sense. And the dollar, like I said, I'd like to get a basket trade going to my forex accounts for the dollar to get weaker. I'm just not quite convinced that the dollar is ready to make that full move. But I'm saying this from experience. Okay, August is a very slippery month sometimes. Sometimes August is very dull and very indecisive. Jackson Hole usually starts to spark some interest in volatility, but August is usually a month where if just I just want to kind of give you a little heads up here. So August trading, let me just draw this out here. So August trading, okay? If you see indecision, look for sneaky decision. Okay, what that means is if you're looking at prices, that are going sideways, 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 everything's contained. You can identify resistance and support. You identify wedges and patterns that are showing like no real sign of confirmation to break out. If you see indecision, look for something to then decide to break out. Look for confirmation above a high or below a low. August is sometimes that sneaky month. I've seen it happen to dollar crosses. I've seen it happen to the yen basket. I've seen it happen in currencies a lot in the Forex market. In the stock market, same type of thing. If we're sitting here with the Russell at these like, higher highs, but not necessarily all-time highs, we're going to get a summer breakout. Maybe. Maybe we still have this rotation as we come out of Jackson Hole going into September as the market anticipates the rate cut from the Fed. If we're sideways, again, look for some direction. So historically speaking, let me pull up the Edge Finder here. Edge Finder. Let's go to the what did I want to look at? Oh, the seasonality. Okay. So we'll go seasonality scanner. Month to year. There we go. This guy. So on the S&P, okay. So we go S&P for the last 10 years versus this year versus the 5-year average. Look at where we are for July. Okay. So July is actually flat right now because of that recent correction that we've had versus a historical backdrop, which is 10-year average of July is 2% positive and the 5-year average is over 3% positive. This year has not delivered. Look at this. I mean, this is kind of wild, right? Some of the swings we've seen in the markets, month to month. But my point is, as we get into August, September, if we are down in down in July as we finish the month negative, you got to wonder if August is going to be more of the same of just a sideways month or kind of this indecision month where it's a transition. And then September usually is not a great month for stocks. Historically, September is bad. Historically, September kind of lingers into October, and then October kind of takes it where it stabilizes. And then October to the end of the year, we typically have some type of bottom. I don't think this year is necessarily any different. If we come out of summer, we can't take out all-time highs, right? If we're sitting here with all-time highs that can't be broken through August, don't be surprised if we have more of a pullback coming for August, September if things are a little bit nastier. And then it's maybe the rate cut could kind of save things end of September, and then the market gets a little bit more excited and starts to rip to the upside with the October to December rally. So just want to point that out. I mean, let's go into SPX for a moment. I saw this chart yesterday when we were talking. Okay, just take a look at the technicals here. I mean, it is very possible. This goes back to a couple of videos I did. I just published this on TradeView. I put this on Twitter and all over the place. But if we had this market go high, low, lower high, lower low, I just want to ask you all out there, how many of you would be surprised after a 5-wave move, 1, 2, 3, 4, 5, how many of you would be surprised to see just a 1, 2, 3 correction? I would not be. If I'm talking to anybody out here that understands wave structure, Elliott wave, that is what is textbook. Okay. So there is a chance that yes, it's been a good week. My Qs are hanging up above 460, which is what I need. My IWM staying above 218 so far, which is what I need. But I'm watching these levels closely. I've got to make some decisions on a couple of pairs. I mean, I was assigned on Tesla early this week. I'll debate on that one. I was assigned on Google this week. I'll debate on that one. I want to see if my credit spreads actually pay me by Friday. If they do, then I might still take ownership and then flip the stock for a little repair over the next couple of weeks and try to, they're not bad. I mean, if I own Tesla and I own Google, I'm not worried about having those in the portfolio for the short term and trying to make a couple bucks by lowering the cost basis aggressively. But because we've broken some of these trend lines, this getting outside this trend line, pulling back to the backside of the trend line, if we start to push a little bit lower, I just look for that to be a 1, 2, 3 correction. That's it. So 1, 2, 3, and that's against this resistance becoming support. And I think there's a good chance to bounce from there. Now, could that be August to September? Yes. Could it be? Yeah, I hope it is. I hope it's that simple. And then once we find this area, there's a lot of buying interest and off we go. Now, we still have earnings today, which are pretty big ones. So Meta had good earnings tonight or last night over well, we had good earnings. We beat on top and bottom, so EPS and revenue were solid on Meta, but we're not breaking highs. Now, I got into Meta with a credit spread. Um, I had it was a 520 by 515, and then a 420 by 425. I collected $8 of credit, and I just closed it this morning for $7 debit. So I'm up $1.10 per contract. So for a one contract trade, it's $110. For a 10 contract trade, it's over $1,000. And all I did was I just took out some of that quick decay because price did push to those in the money prices that I needed. So Meta cooperated, Mastercard cooperated. I took the assignment on Google, which is trading. I've got a 170, so I need to see if this week. We'll find out tonight because Amazon and Apple both have earnings today after market. If they're both good, it might be enough to stabilize the market for this week. And that's fine because I'll keep the short-term profits hopefully. And Google, I might end up keeping the shares. I was assigned at like 190, but I have a put to kind of lower the cost basis relative to where current price is at. But ideally, this kind of a if this happens, this is awesome. If we're back down below 170 by the end of the week, which kind of a catch 22. Like, do I want it to be below 170 for this trade? Yes, but for the broader market, no. But either way, I'll probably end up keeping Google and repairing it over a couple of weeks, and I'll probably end up keeping Tesla and also repairing this down a little bit for some ownership. So I have some ratio spreads in here. Anyway, doesn't matter. You're like, come on, clown, get to the charts. So I'm just saying this was the stuff I got to manage. So my list of trades that I need to manage by the end of the week, I'm just going to make a list and then we'll talk some analysis and throw out some we'll throw out some pairs. So I need to watch Apple because I have a 220 bull put spread. I need to watch Amazon. I have a 185 bull put spread. I need to watch the IWM to see if it stays above. So I'll just put the numbers here. Apple greater than 220 or 220 for profit. Amazon if it's greater than 185 for profit. IWM if it's greater than 218 for profit. QQQ if it's greater than 460 for profit. And I have Meta, which is closed already for profit. So MA is profit already. Meta is profit already. And then I have Tesla would be potential ownership, potential quick repair, and Google, potential quick repair. What else? I've got to watch Pfizer. If it's greater than 30.50, it gets called away for about $2,500 in profit this week per account. FXI, I need to look and see if it stays above 26.50 for profit, and that's a repair trade as well. And KWeb, if it stays above $26. Okay, so this is my summary for the week. If these prices stay above these levels, these are all profits for me. If this is the case, if that's not the case, Apple's a small risk. Apple has earnings. I would imagine it's pretty steady earnings Thursday after market. Maybe Friday ends on a high note. Historically speaking, Fridays tend to be where the market makes highs for the week. Thursdays and Fridays are typically highs for the week. So we'll see. We'll see how stable things are at, but these are things I need to watch. Okay. All right. Let's see here. S&P falling. I mean, it's down from the high around, it's just shy of 555 this morning, and we've dropped around $4 to $5. Here's the SPY. Let me go short term here. So SPX, I've got a centered trade around. Let me see where I put my positions this morning. I centered this around. My sell trade is 5,500. So right now I'm sitting right in the middle. I centered it around 55.50. I went up to 85. It went down to 5,500. My put side is probably being threatened right now in the SPX. Let me check this position. If we have some chop today, this should still be okay. Here's my position. We're trading right around my break even. I collected 385. It's trading for $4 right now. So I'm still watching and monitoring this. If the put side is going to be threatened, then sure, I might take a small loss on this. But if we just chop around here, which I could see happening for today, if we go, let's say, we gapped up, we faded. If we oscillate here for the next hour or so, then that's probably enough for me to extract my 15% take profit and get about $55 on the SPX. Okay. Yep. So we'll see. I mean, if it dumps hard, then yeah, that's an issue. But if it just stabilizes and we have a little high, a little low, and it just kind of stays sideways for the morning, in the next maybe 30 to 60 minutes, this trade should close up for profit. I did the same thing yesterday. Even with FOMC yesterday, I was able to close out here for a small profit. I grabbed about 15 cents of credit, which again, not excited about that. Usually my wins are about 50 to 60 cents on the SPX. So I'll keep an eye on this one for the morning. So SPY wise, SPX wise, I'll watch that. Let's take a look at our stocks. So index wise, with earnings today on Apple and Amazon, I do wonder if the market is going to, give it another lift. The market got really excited from Tuesday to Wednesday, and somehow that excitement seems to be fading today a little bit. I know Nick pulled up the heat map. I'm going to pull up the same thing. So let's go FinViz heat map right now. We're looking at, there's some broader red at the moment. I mean, we've got your household names, your Microsoft, Nvidia, Apple, Google, Eli Lilly still doing no wrong at $830. Thanks Ozempic. I feel like that's going to be a commercial at some point. Like, thanks Ozempic. People will be eating McDonald's and 20 pounds lighter. What's up, dude?
Hey, Chris. How's it going?
Good. How are you?
Pretty good.
What you watching today?
Well, I am watching the Qs.
Okay.
I was short earlier this week, and I'm kicking myself because I was up, and then Wednesday came around and reversed everything.
Okay.
But I'm not really. I don't know how confident I am in an AI tech rally still. If anything, I see more in the value plays like Dow and blue chip stocks. I feel good about Russell, but that is also down today.
Yep. And down pretty hard, man. I mean, the Russell's down 1.7%. I need to see if my 218 level holds this week for a bull put spread to be profitable. The DIA, maybe this, and again, we're going into August. I mean, don't be surprised if we see July high pullback. I mean, this is where August could be, right? August could be indecisive on the Dow before we start pushing higher. IWM, I think looks pretty good, but it's going to be volatile, man. We're getting some heavy call volume on the IWM. It poked the highs yesterday, but that was clearly a fake out and a bit of a bull flag after this. I think this was a pretty solid ascending wedge, and so we break out. We're hopefully flagging right here. I would not love to see the IWM come all the way back down and retest this low. Or I'm sorry, this high of resistance becoming future support. I mean, that trade is okay, but I'd almost prefer to see this stay kind of in a flag pattern where it just stays in this area to show that buyers can still take it up higher. I'd love to see the destination still at 240 to 245. I mean, I've got a couple of trades on the Russell that pay really well, but I realize that maybe this isn't ready. Maybe we're not in this full on broad market recovery yet. The Russell is still going to lag behind the big Mag 7s and your top 10s in the S&P and the Qs. I like the idea of value. I think the best value play right now is just to stick to the Dow, to be honest. I think the DIA is an easy way to trade value. It's diversified, it's price weighted. So even a mega cap stock like Microsoft that's in the DIA doesn't matter when it's price weighted. It's just one tiny little portion of it, just like everything else. So we're getting the VIX spiking up a little bit today. We have not seen the VIX get up to 19 or 20. So I still wonder, if we have additional volatility, does this poke up here towards $20? I'm still hedged like crazy to the downside on ES and NQ. Oils, I was going to say oil was stable as of yesterday's price, but kind of seems to be giving it back. So yeah, man, a lot of things seem to be questionable.
There's something to look at too.
Yeah.
On the technical side. So if you pull up NASDAQ.
Okay.
We had
NS 100 or what?
I got it up here. Yeah, NAS 100.
Okay, yeah.
We got this sort of downtrend in this channel. We broke out of it yesterday, came up, test the 50-day moving average. It's also a previous level of resistance or support from this is June and July. So we came up and tested that this morning, pulling back. So this could be like, the problem here is I thought we were going to test one of these two levels, which we did, which was the either the 18 fours or the 19 fours. So we hit that, and then from there, I was saying there needs to be a decision. So if we broke higher, and if we do that today, this is more so this is a technical reason. But if we close higher than this 50-day today, I feel less worried about another leg lower.
Okay.
But the fact that we're rejecting it kind of at the start of the day is a little concerning. I mean, who knows where it's going to go? We moved 4% yesterday on the NAS.
Yeah.
So this could be just as big a move. But you know, I'm not too confident yet. I'm looking at this and kind of wondering where it's going to close, and depending on where it does, I think I might either take another short or I might look for longs, just depending on where it breaks or closes today. But I don't know. What did you take from yesterday's move? Because that was the biggest move we've seen all year. Was it earnings or was it the Fed? Was it both? Like, what do you think?
I think it was both. I think that the market was excited to get a little bit of a boost in earnings to say like, okay, we're back in earnings season. It was a Mag 7 like a Microsoft, one of the top 3 companies in the world, beat top and bottom estimates. Meta did the same thing today for a top 10 stock. You got Apple and Amazon. Like here's the deal, man. I see this, right? This is the QQQ. Last week was a crazy week. We did tap the lows, okay? But we tapped the lows and we reacted aggressively off that. And I just think that that kind of 10% level was maybe a bit more psychological, and the market got all excited about an earnings report that was okay. AMD was positive, Microsoft was okay, and they both kind of stabilized things for a big rip yesterday. I do think the market was a little bit more anticipatory for the Fed rate decision, just kind of push things ahead of time. I was in the background listening while you guys had the stream running for Powell's press conference. He essentially was saying things look appropriate for a rate cut, but we're not going to do it right now. Like no action right now. It's like, we get it, dude. Like we understand you're pulling back because there's no action today, but everyone just kept asking, like, it looks like September, You just like, well, we're not making decisions today. It's like, dude, does Jerome Powell know that the CME watch tool exists? Because I think that he does. And it's like, there's nothing that he can say that is going to change the market at a 90+% probability that it's going to all of a sudden switch and be zero. So I think it is a built-in, baked-in cut in September that now the market is just more interested in, do we have earnings to support a healthier recovery, or is it only Mag 7 and then we're looking at, the overall broad market, like we're still not there yet. Look, today's price action, I could see it got a little exciting yesterday with a huge gap. I mean, we had, these 1.5% gaps over the last couple of weeks, and then we had a 2+% gap, which was a monster. All I'm thinking, like example, what happens if we fill this gap today? Like that to me is not a good sign, right? If we fill this gap today, that's a terrible sign going into August, because I feel like all of a sudden this low becomes vulnerable. That momentum seems to be shifting stronger. So for me, I'm talking even more short term. As long as we hold the kind of yesterday's low where we had, the close, the open, if we hold that level and stabilize for today, then it's a little bit of a sigh of relief, where tomorrow with Apple and Amazon, if they beat earnings, then we could be slightly higher on the week. But I don't think we're going to test last week's high. If we do, that's a crazy week, dude, because that would be, $27, $28 from high to low. And this week has already made like a $17, $18 rip as well. So we're getting some big swings in the markets, man. This is from this morning. We've gone up $21, almost $21.50 on the Qs after a drop last week of like $28 or $29. Yeah. That's a crazy swing the last couple of weeks.
Yesterday's move took out, like, let me see how much we were down on the month at the start. So we were down like 5-6%. And then yesterday's move alone took us back up to a minus 1.7% on the month.
Yeah.
So what looked like it could have been a bearish reversal, if we saw that inverted hammer turn into, I don't even know what you would call that, but that's just extremely mixed in my opinion. This month, I have no idea. On our tool, it's suggesting that it's overextended, but this can last for months. So
Sure.
we don't, or at least I don't really know what's going to happen. I'm just cautious to both sides. So I've got, short term, way out of the money puts. So they're very cheap. And then I'm also trying to have these, I guess, verticals to the upside on the SPY or the Qs. So that could be, I guess that could be what would hedge me is the puts. But right now, it's just hard to tell. And we have Amazon. Maybe we want to look at that and see what we could price out there for their earnings. But
Okay.
I remember last time they didn't move too much.
They did not move that much. I'll give you the numbers here. Price action in the chat. I do see your messages. You just can't type 10 messages and have me read them all. So I'll get to them. I'm just having a conversation with Frank. So let's go Amazon right now. And so a couple things here, Frank, on my chart. What I'm looking at here is if we hold, let me change the color here. So we've come back down this morning. We're testing kind of this intraday chop from yesterday. Like I said, as long as this gap, I think, has to hold, this would be good to kind of bounce. I mean, my gamma level today that kind of sticks out is the 552. So if we just kind of oscillate for the day and we just kind of settle in around 552 or so on the SPY, like I said, that's stable. And then we see what Apple and Amazon have to offer. But anyway, that's what I'm watching in the near term. Let me put that back up. Let's go earnings on Amazon. So we are expecting to see about an 8.5% move. This is fairly conservative, I would say. We've got 8, 11, 12, 14, 12, 9 and change, 9, 8.5, 8.3. I think 8.5 is safe. So let's do an 8.5 times the stock price of Amazon, which is trading around 190 today, or was. Now it's at 188. Okay, we'll go 188. So we got an 8.5% move expected on a 188 stock. We're looking at about a $15.98 or $16 move. So a couple ways I can trade this. So right now, I already have some exposure on Amazon with lots of trades, but just for this week in particular, the trade I have on Amazon is right here. I do a 185 by 182.50. I just did a two contract bull put spread. So if Amazon pops in with stable or better than expected earnings going into Friday, it's only one day to manage the trade. If we stay above 185, I'm profitable. So I'm hoping that we have a solid earnings report. We've had a decent correction in Amazon. Let me go back to the daily chart here. I mean, this has been a fairly decent correction from high to low. I mean, we got up to 201. We blasted all the way from, I mean, that's a big drop, dude, about 25 points from 201 to 176. I still have a measure move on Amazon for head and shoulders to get us up towards 210. And I'd like to see if just earnings can kind of keep it like stable, right? I mean, if it breaks lower, like I'm still going to own Amazon and I'll own it forever. I think this is a great company to have in the portfolio, but my break even is 137. The more I can use options to lower my cost basis, the more profit I end up making when I'm ultimately going to let go of it. But point is, if we have we're looking at about a $16 move. So a couple ways we can trade this. And so if we're taking the trade based on earnings, I don't think we can do a one-day expiration. I think that's a little crazy. It's nice if you're going to be selling options that have that immediate decay because you essentially take a zero DTE trade. But you never know if Amazon's going to blow it out and have, for example, if I did an iron condor, which if you can see my chart here, this is the expected move, right? We're looking at about a 1160 move per tasty trade with an implied IV at 66. I think we're going to go a little bit higher towards like 16. To be safe, we could probably do like a 20. Like let's go out to like a $20 move and see if that actually pays pretty well for some type of sell trade. So if we're trading at 187, let's go to how about this, Frank? Let's go to the 210 or let's go to like the 205 or so and say, look, Amazon, if you can't break these all-time highs, we're going to sell. We're going to sell you. So if I did a 205, okay, 205 by 207.50, I can do a bull put spread, or I'm sorry, bear call spread. But that's a 250 spread that's only going to give me 30 cents. That's not a good trade, in my opinion.
But that's for tomorrow, though, right?
Yeah, it's a zero DT. So as far as the profit, I mean, having 30 cents divided by 250, you're only getting about 12% of the premium, which For a 0 DTE, I mean, I don't know, 10 cents on the dollar is not that great. I'd like to have a little bit more if the IV is a little bit higher. Maybe I'm just too far out of the money. Maybe this is better if I did like the 200 as the top. Now we get 50 cents. That's a little bit better. I mean, we'd have to hit recent highs, right? But at 187, if we have a $15 or $16 move, that's enough to hit the highs. So I don't want that position to be threatened. That's kind of my point. So if I get out of the way, I think a 205, we can make this a little bit wider. A 205 by 210, we get 50 cents, but we're risking $5. So my risk is 450. My take home is 50 cents or so. That's to the upside. To the downside, I would say if we did like $20 to the downside, 165, if there's any premium there. If I did a 165 by 160 on the nose, I don't love that trade, dude. I mean, you're talking about $4.50 of risk for an 80-cent credit. So you can see, I mean, the risk reward is not great. There's like 3 ways we can spin this, but I can make $80 with a probability of about 81%, which is okay, but I'm risking about $420 on the trade. Do I love that trade? No, but if Amazon doesn't deliver any type of big movement, then that trade's spot on, and by tomorrow that trade's going to be profitable for 80 cents. Not bad. But would I trade it that way? Probably not. Here's what I would personally consider doing. I'm keeping the bull put spread as is. I'm already, pretty exposed on Amazon with some positions here. Like this is one account and everybody has this. So I've got the 185 by 182.50 bull put spread. I have a bunch of sell puts and some ratio spreads, and that's pretty much it. So I'm just like stacked in with 140s and 135s and 130s and 125s. If Amazon comes on those levels, give me the shares. I'll take shares. I'll take 500 shares of Amazon at those levels. So that's my play. But for this week in particular, I just want to see if it stays above 185. So earnings plays, either Iron Condor. But let me ask you: are you happy making 75 cents and risking $4.25?
Not normally, but this is one day out.
It is, and again, for a 1 day out move, you're looking at about an 82% probability profit. I'm going a little bit further out than what the Tasty IV shows at $11.61. I'm going out to calculate what I think is a conservative measured move around $16. So the 185 to the 165, that's $20. That's plenty wide, and the 185 to 205, that's $20. I mean, unless we have a blowout move, $20 is wide enough that I think that would be a good 0 DT trade. So I'm going to do this. I'm not going to take the trade, but hypothetically, I want to track this trade because I think this is a pretty easy 75 cents to get. So I'll put this in as just let's say this is a Frank and Chris discussion. If I did the 205 by 210 bear call, and I did the 165 by 160 bull put, collect 75 to 80 cents credit. Okay, and we have about an 82% POP. So probability profit's about 82%. I just want to track that trade just to see if that was one trade we did on this earnings report, did it do okay? It's probably a trade that has a high probability of winning. I think it's a good trade. But what else could I do?
It's going to move more?
What?
Maybe we can look at Apple instead.
You think Apple's going to move more? Oh, dude.
Than Amazon?
I mean, volatility-wise, Apple should not move more, but we'll find out. Okay, let's go Apple.
I think it moves more. Okay.
So Apple, it has an average of about 4.8. So 4, 4, 4, 5, 5, 5, 5, 4, 4. So I think 4.5 is the calculated move on Apple. So from an earnings calculation, from the actual earnings history, we shouldn't move more in Apple. Now, Apple has been way more volatile than Amazon. Apple's been, lingering in the AI space a little bit more. They've done the buybacks. Apple's sitting on ridiculous amounts of cash. I've said this for a long time. If I could buy a corporate bond from Apple at 5% yield versus buying a government treasury at 5% yield, I would take Apple over the government. As far as like long-term, like Apple is probably healthier than the government, with the exception of they can't print money. Anyway, so 4.8 is the average. We have a couple over fives. I think 4.5 is going to be a conservative but safe play. So 4.5%. The stock price right now on Apple is around 220. We're trading at 220.77. So times 220.77. So we're looking at about a 990 move in Apple. According to the IV here, it's about the same. Apple is expecting IV rank of 81, an $8 move expected in Tasty's platform versus an 11, almost $12 move in Amazon. So from a just sheer mechanics, Amazon should move more than Apple, but you have a hunch we're moving more in Apple. So what do you want to do? Same thing. Do you want to like Iron Condor? You want to try to collect the premium, be a seller for a 0 DTE? I think that's a good play for a 0 DTE, man. I really do.
I don't know. I feel like last time the Iron Condor, if you're betting on volatility from what we priced out for Amazon, did not work. So you could even go, I feel like 7 days out, potentially collect more premium.
So you want to sell the Iron Condor and go out a week and collect that premium.
Because I remember we bought one last time and it didn't go where we needed it to go. So the same
But if
thing
you bought
happened.
Apple, it went a ton. This was the last big earnings print on Apple was here. This one with a reverse Iron Condor win a ton. That was an easy win. So Apple did on the buy side pay out really nicely. Amazon didn't. So here's my thinking. You like the idea of selling an Iron Condor and going out an extra week? Fair?
Yeah.
Okay. So let's go an extra week and let's track this one. So we'll go August 9th. We're trading
I probably wouldn't take it, but yeah, I'd want to see.
Okay. So we're trading at 220 right now. We're looking at about a $10 move. To be safe, if we really wanted to collect a lot of premium, then we would sell the 230. So you would sell the 230 call and then buy the 232. So create that little spread. You're collecting 55 cents on a 250 spread. It's about a third of the width, which isn't terrible. 50 cents out of 250. Oops. You're looking at about 20% width. It's almost there textbook wise. It's okay. And then if we did the $10 move this way, we'd create a bull put spread. So for $1, you can grab $1 out of a $5 risk. So your credit's 1, your risk is 4. This is out to next Friday. Now, personally, I think this is a little tight. So if the move is expected to be $10, I don't want to go right at $10 and have this thing like poke the highs. So I might try to go out a little bit further and maybe
what would be like a 240, 241, and then.
Okay, so you want to go $20? You want to try $20?
Yeah, I mean, it's probably going to be pretty cheap.
It'll be worse. So you're going to collect way less credit. You're collecting about 40 cents now, but your risk is 250. So collect 40 cents, risk 250. It's not terrible. I mean, I've seen worse setups. I've seen 10 cents to risk 90 cents.
It did work that time, though.
It did work. I know. I'll give you enjoy those 10 cents. All right. So the 235. So if we went up, this is going up $15 and going down $20. So actually, I can tighten this up. Let's make this a little bit better. This can go up to 205 and 202. Okay. So we can make 55 cents and we go $15 wide. If I want to go to 240, like you said, you're going to see the premiums are going to be less and then go down to the 200. So now we get about 25 cents for a $2.25 risk. So it's not a lot of money in profit for the risk. Okay. I would be, I would say this, I'd be comfortable if I did like this trade. It's a 84% probability. We're outside the expected move by quite a bit. This is almost a 2 standard deviation move, by the way. So we're expecting $10. This is $20 outside of current price. I would take this trade and probably do a 4 contractor simply because if I do 4 contracts, I can make $100 with a high probability. And if I'm wrong, I'm risking less than 0.5%. Actually, less than that even. So it's manageable. I would say for the sake of tracking it, I don't mind this being a trade that we say, look, we talked about this one if it works out. The one thing about this one, though, is we are also going to be going out a week further. So if Apple, pushes higher, pushes lower, it will threaten one of these. And this will probably not be this is the downside. If you collect 26 cents today, the amount of capital efficiency of you can't really take half profit on this one. If I'm going to say, hey, I'm in 26 cents of credit. I'm going to close it for a debit of 13 cents. I mean, the amount of time you're going to have to wait for a week to get a 50% profit, that's a lot, because the amount of sensitivity, if we go up, this becomes $1 easy. Like my 25-cent credit becomes $1, $1 risk real easy. So that's the only drawback that I see is I don't really love that trade because the risk is way higher up front. To risk $900 to make $100, that's essentially like, making 10 cents to risk 90 cents, right?
Wait, let
I
me
don't
ask
love
you
that trade.
something.
Okay.
Why not keep the sell legs close to each other, like towards being more in the money?
Okay. So you want to
Because that's
go.
no. Keep your buys. So you buy your call and you sell a call, or you what is it? You buy a put lower, you buy a call higher. Keep those where they are. Now move the sell legs down to
Closer to
let's
the
see,
expected move.
current price is 221.
Yeah. So you want to,
So
basically you just
move
want to make
that
the spreads
down.
wider.
Yeah, because
So if
you'll
we did like
collect more if it stays.
you will, but look at the risk now. So now let me go back to one contract just to keep this simple. So if I go one contract or 8, one contract, I can collect the 267, but I'm risking about 730. Now within this is not a bad play for just money. I mean, it doesn't take up a lot of buying power. I'm still defining the risk. The one thing you can also do here, if Apple were to drop, you can actually turn this into ownership. I mean, I would be okay on the sell side. If this thing drops hard, I wouldn't mind taking ownership of Apple simply because I could own it and then I could quickly repair it with, going out. I mean, look at this, dude. If you sold a call at the money, you're getting $6. I mean, a 1 week out, you can get $5 or $6 to lower your cost basis. It'd be easy to repair the trade if you have the capital to own the shares. So I could do that. But we collect $2.67, which means we're risking about 7. So it's almost there to collect about 30 cents on the dollar, right? 30 cents out of a $10 wide spread. So you want to collect $3 out of a $10 wide spread. We're collecting about 270. So the premium's not quite where we want it, but it's close. And there's probability of profit now is about 62%. But the break even, the nice thing about this trade is the break even is now up to 232 and change, and it's down to 207 and change. So that's outside the expected move, which is kind of nice. So again, for the sake of tracking, I'm going to track this trade. I think this will be interesting. I'm not going to take this trade just because I'm already in Apple with an earnings play. If we stay above 220, I get paid. That's fine. If it dips below, I will probably take ownership of Apple and repair it. I don't mind like taking a flip for maybe a couple of weeks, lowering the cost basis by a couple of bucks. So anyway, just food for thought as we come into earnings tonight and see what price is doing tomorrow. So for tracking sake, we're going to sell the 210 put, buy the 200 for a $10 wide spread, and then sell the 230 and buy the 240. So let me get that up on my chart here for Apple. So we'll go Frank and Chris. We've got the 210 by 200 bull put, and we have the 230 by 240 bear call, 2.65 credit, and then you have a 7.35 risk. You're looking at about a 62% POP, but the average move is we're expecting a 9.96 move. So the good thing is we're collecting the profit on the ends of that expected move, but there is risk in the trade. So the nice thing is a trade like this is we could, if price does cooperate and we don't see a big reaction out of Apple, then within probably if we took this trade today and you go over the weekend, what's kind of nice about this is as you come into trading on Monday, if Apple is here by Monday, this is probably going to be trading for like a $2.25 to $2 debit and allow you to have some profit up front. So if you want to go after like a 15% take profit or 25% take profit, you could probably see it over the weekend if price is pretty quiet coming into trading tomorrow, which isn't bad. But going all the way out to next Friday, you have that little outlier risk of if things get a little bit, testy on the highs or the lows. But I think for just discussion today, it's a good trade. I think it's worth tracking. I think it's worth tracking. Okay.
Yeah,
But like I
I
typed up
agree.
earlier, yeah, I like it. Because the other side
I
of it,
know this sounds.
go ahead.
Sorry, we're like cutting in and out. I think it might be my computer or something, but
Oh, it's okay.
I was
I'm just interrupting
just
you.
gonna say that I think I like the I know this sounds crazy, but sometimes when you bet really small on an outlandish play, I wonder if that can work. Like last time when Apple moved so heavily, or last time when Google moved so heavily, those were very cheap options if you were to go out of the money like that. So I'm wondering, I know buying options is usually a losing battle there.
Okay.
But when it's super cheap and you have other plays running, like you're selling for premium, you're getting a more steady income from like actual strategies. What would like I wonder how much it would cost versus like how much it could be worth if you were to buy way out of the money option calls or puts on things like things that are 11 cents with under 20 delta or something. Seeing if that were to work out, and if it doesn't, you lose 11 cents.
Right.
But if it does, you could have like, I don't know, a positive $5 or something.
Yeah. So give me an example, because when you're talking about a delta of 10, you're looking at a 90% loss rate. So, and that's not a bad thing, because if it does pay, you're getting paid like 9 to 1, 10 to 1. You don't need to have a lot of winners to do that. You know, a 9 to 1, 10 to 1 payout is awesome. I mean, you and I talk about the Big Short a lot.
So like
That's
when you're playing earnings,
that's what the garage hedge fund
yeah.
was. Okay,
And
I've
when
got
you're
218
doing earnings, stuff like that can happen. So
Yeah.
it's almost like, what if you bought calls and puts way out of the money, and you would
Okay.
lose 5, 10 cents, 20 cents for the opportunity of making like $5, $7 on that.
Okay, let's find out. So for Amazon, let's talk about tomorrow's expiration. So let's clear this trade. If you wanted to go out of the money, so we expect the move on Amazon to be about $15, correct? Give or take.
Benji, what'd you
That's
say?
right. You expect the Amazon move to be about $15 or $16, correct? Like that's what we calculated.
Sure.
Okay. So we calculated roughly a $15 to $16 move. Now, IV from the Tasty platform says about $11.50 move. Let's just say you want to pay cheaper. We're trading at 187. Let's go to a 192, or sorry, let's go to like a 202. If we hit this 202.50 or 202.50 call, look, I could pay $1.41. And right now, if somehow this gets in the money for tomorrow's trading, this goes from $1.40 to like $6 overnight. That's a good reward to risk trade, right? I mean, there's no cap, but you know, am I comfortable with a 85% chance that this trade becomes worthless by tomorrow? If you're comfortable with that risk, that's the trade.
And that's the problem. It's like it's too close for you know, it's got to be further out to be cheap enough, and the odds have to be very low. Which, I mean, it sounds dumb, but if it works out, it's really good. So I don't
here's a
know.
question.
I was just curious, but
dude, this is a totally fair discussion. So I think a question is this: is it fair to say that, do you think, and I think this is valid, will Amazon get to highs again by the end of the year? I mean, okay, so we're trading right now at 187. Will Amazon get to 201 by the end of the year?
That seems very probable.
Right, I think so too. So if I went out to say, let's just go to the end of the year. Let's
tomorrow,
go to right. So let's go to December. Let's say that Amazon, you can see my stack puts here by the end of the year. I'm just trying to rake in a bunch of premium there. But if we said that this is going to go to the end of the year, you know, about $200 or so, look, I can do a $200 call at 12.15, and look, I'm going to pay $1,000. I'll pay $1,200 to say this can get back to the highs. Now, currently, if I did this and I go out of the money to $200, it's still a 40 delta, which is not like crazy out of the money. But look at the expected move, right? This is saying that Amazon by now until the end of the year is going to expect about a $30 move. Well, this has this up on the high side around 215. Well, if I did that expected move and go to the 215, which is the expected move, I'm only paying $7.25 for something that if we get this at the money can pay $16 to $18. So that's a 2 to 2.5 times profit, if I'm right. Right? But you have to be comfortable with, am I comfortable risking $7 with a 78% chance that this expires out of the money and it's worthless? Because the payoff is good. I only have, if I have 2 to 2.5 times profit, I only have to win about about 35% of my trades to make money. It's not bad. Like a 2 to 1, a break even for 2 to 1 is 30%, 33%.
Yeah, I don't know. That it at that point, like you would do something like a vertical play or something.
I would do.
I don't think you
what
would
I'm already
straight up
doing.
buy a call.
Correct. What I would do is I would do a debit. I would probably do something where if I bought like an at the money, so let's say I bought the at the money call, which is going to cost me around $19. Okay. Now with that trade, or if I buy an at the money, we're trading at 187. Let's just say I buy the 185. And then against that, I'm saying, look, this is going to cost me $19, Frank. Now, if I go 185 to 225, here's what I want to ask. Am I willing to pay $14, okay, for a chance to make $40? Is that a good reward to risk? Yeah, like you're risking $1,400 to make $2,600. You also increase the probability a little bit. If we think that this can go higher, I mean, if we get to the highs at 201, or we get to a measure move at 210, look, if we get to 210, that is a $25 move on a debit that costs you $14. You can still make money on the trade. If we stay where we are, right? My break even is technically 199 right now. So the best way to do this, in my opinion, is if you're putting a timestamp on this, you got to look at like either having higher reward than risk or having a high probability. That's always the trade-off with options. It's either high probability and you typically have a lower profit, or higher profit, lower probability. That's the trade-off. So for me, I'd rather have time work in my favor. That's the hardest thing is, I like Amazon. And I think what would make me angry is if I do something with a long option that I don't time it well enough to make money. So what I'll do instead is I'll use time on my side, and I just collected all this premium up here. And I'm just like, look, if Amazon were to drop a bunch, I'll own it. And I'll gladly own it. If Amazon just does nothing for the next 3 months, I'll still make money. If Amazon goes down by 20%, I'll still make money. If Amazon goes to infinity, I'll still make money. That to me is an easier trade without the frustration. Yeah. We got to go.
James just walked in. He said we got to get off because Forex James is coming on.
Okay. One quick thing for price action. One thing, RBC. All right. Give me 1 minute.
We're over time.
All right.
I wasn't really paying attention, but we're
okay. My fault.
We'll talk about it later.
Okay. Sorry, James. And for price action, I see your question. Join my Discord, dude, and I'll let me do something on RBC for you. Okay. You can find my YouTube. I got a Discord link. Reach out to me. I'll take a look at RBC. We're sitting here at all-time highs, so I'm a little skeptical on that. But buying dips looks pretty good. What is this? Metal? Is this right? RBC? Anyway, all right. We'll talk about offline. All right. Thanks. Bye.
Yeah. We'll talk about it. All right. Thank you.
Yeah. Bye.
Hey guys, let me just share my screen. Forgot to do that before. How is everyone doing? Hope you're all having a good end to the week. So yesterday, we discussed quite a lot of things, quite a lot of different pairs. We looked at the New Zealand dollar this week quite heavily. And I was saying at the bottom, basically, the support, I was looking for a moderate recovery. We did manage to get that. However, the overall trend of the market is very clearly bearish. So I was saying I was looking for this moderate recovery into a 50% pullback, which we've had. So you can see we've hit this 50% pullback really nicely, obviously due to the US news we had today. And we've seen quite a nice rejection. However, as this was a news move, I'm not going to execute on it just yet. So I'll maybe look at it on Monday. However, I'm not going to start placing trades at the end of the week. That's just not my style. However, I think we could see further downside on this as we see a potentially stronger dollar, although the Fed did sound quite dovish, and it did sound like we will get rate cuts in September. However, I think, in the short term, there's no reason we couldn't see a little bit of further downside on the New Zealand dollar, especially considering it's a pretty poor currency. We're in a double, well, they're in a double dip recession. So New Zealand dollar looks quite nice to get into for some short positions. So we'll keep an eye on that one as things move forwards. Euro dollar, very similar situation. I was quite contrarian on this one. People were saying, back here, I was saying that I was looking to go short. The chat, so the trader Nick chat, was that most of the people were saying that they're bullish, they're looking to buy, they're already in buys. And essentially, the price action did support buys at the time, but I did see some bearish momentum coming into the market, some sellers coming in due to the fact that the ECB was a lot more dovish than the Fed. And I think the rate cuts in September, obviously, they're very, very expected. It's not going to be a shock if that does happen. So I don't really see huge problems going into that, really. So I'm just waiting for a 50% pullback into here so I can then go short. Now, I keep repeating this, but again, there is a credit agricole target on euro dollar for the end of the year, so the end of Q4 2024 at the 1.05 level, which is something to keep in mind. So if we can catch a nice pullback to enter some shorts, it's we could get a 3.35% move, roughly, give or take, of course. I see quite a lot of talk about stocks. I'm not a stock trader, so unfortunately, I can't give you any insight into any stocks. I wish I could, but it's just not my asset of choice. So the next one is the dollar NOK. Now, again, I've been speaking about this. This one's a very long-term trade that I'm looking to get into, and it actually may be ready on Monday. So if we can get this bearish weekly candle close, I'll start adding into some positions, and the reason is because the NOK is one of the most undervalued G10 currency at the moment, and a lot of bank reports, a lot of institutions are suggesting that they foresee and they forecast a stronger NOK as we head into 2025. So this will be a trade that we hold into possibly Q2, maybe early Q3 of 2025. So we'll see about that one. The Australian dollar. Now, Australia is sounding quite nice to go short, actually, especially against the US dollar. So looking again for some sort of pullback here. We are consolidating a little bit. However, I don't really like to enter on consolidations because we tend to have quite aggressive breakouts, and I don't want to go short in consolidation to something like this and then get an aggressive move to the upside to potentially meet the 200 moving average or retest this level of support, get stopped out, and then miss the move. So I'm waiting for slightly higher pricing and then a potential move to the downside into the lows around here. So we'll see again about this one. There's no trades that I'm really looking at right now to take. I'll take a look at some of the things that you want in a second. So things like the dollar Swiss and gold. Yesterday, I showed you my euro pound position. This one is messy. So we had interest rates by the UK or Bank of England today. came out as a cut, which was not quite, well, it was expected. It was mixed. However, it was leaning towards an expected cut, so it wasn't a huge surprise. We did see the initial move to the upside. You can see this red bearish candle here had a huge move to the upside and then a drop. And the reason that the pound isn't seeing as much bullish movement as you may expect with a cut after 7 straight holds is because there's not a clear guidance for September yet. They're not sure. Well, market participants aren't sure if we're going to get another cut in September or if they'll hold. So we'll see, but I'm holding on to this position for now, although I'm not overly hopeful at the moment. But, you know, we're still hanging on to this 50% level and this golden zone. Price is still technically underneath the 200 moving average. So from a technical standpoint, still quite happy to hold. And again, just because there's no clear guidance for September, I don't really see an issue holding for now. Now I'm in a NASDAQ long position that was moving very nicely. However, we had obviously US news that's affected it quite heavily. So it's coming back down to entry, which is fine. So this is a position building position starter, I guess. So it's very low risk, very large stop. And the idea was to just get into the markets or get into this market and then potentially scale in if we see lower prices, scale in if we see higher prices, and just, you know, scale in as the market moves. But for now, it's just a low risk entry just to start with. Next one is Euro CAD. Now I can't give too much information on this one yet, but if you know, the hint I'll give you is seasonality. Just go and look at how Euro CAD has performed over the past between July to sort of September. Just look at what happens, and that will basically give you everything you need. Now the yen pairs, I'm still in 2 short positions on dollar yen. I'm looking to add in to a long, I'm in 2 long positions, unfortunately fallen off a cliff, but I'm still looking to add into another long position at the 146 level. Just round this out. Yeah, here. So I'm looking to add in at this 146 level. So the first 2 long positions I have are very low risk, very low position sizes. And then this final one down here will be my sort of bigger entry where I go in with a much larger position. And when I say large, obviously it's not large relative to account size. It's just larger in comparison to the first 2 positions I placed. So this one would be possibly a 0.5%, whereas the other 2 are roughly 0.1 to 0.2. So that's something to keep in mind. Australian dollar yen still in these 2. Again, just sort of letting these ones ride. I'm still pretty bullish on the yen pairs. So dollar yen, Australian dollar yen, pound yen, etc. It's just short-term bearishness at the moment that I'm happy to sort of sit and ride through. So yes, Rajivir, sorry if I butchered your name. This is TradingView. It's free. So you can, no cost, unless you want like additional features like multi-charts and lots of indicators and ad-free and stuff, but you can use it for free. So dollar Swiss, we can have a look at that one. I think it's a half-an-hour segment today. Let me just check. Don't want to overrun. Oh, there's no one after me, I don't think, from what I see. So not too much of a time limit. So dollar Swiss, let's see. I was long dollar Swiss, and what I can do is show you. Give 1 second. Let me pull it up. I can show you this. So again, I've shown this quite a lot. So I'm sorry if you've been here before while I've been showing this. It might get a bit boring, but the reason was because we've had another rate cut and dovish forward guidance from the S&B have halted the Swiss rebound. Persistent political risks in Europe and global uncertainties could challenge the Swiss in the near term, while lower inflation differentials will depress the Swiss real valuations in the long run. So essentially, I was looking to go long with a stronger dollar and a weaker Swiss, but clearly that was not a great entry because I entered, it was roughly here. So actually it ran quite well. initially, but obviously this was just a pullback. So it was a counter trend trade, which isn't really what I like to do. So it was a bit of karma for not following my technical approach properly. I should have really waited for a trend change and then an entry. It was quite aggressive on my part, but I've still not lost hope on the idea for the long term. It's just waiting now for another entry. We have seen quite a lot of bearishness on this asset, and I was short, so I've been trading this one both ways. But again, I lost on the short as well. So I entered roughly here. Stop was somewhere around here, so it was quite a small stop, quite a tight one, unfortunately, on this one. My take profit was down here, so sadly missed out on this one. But that's what it is, unfortunately. Let's see, actually, if the dollar Swiss is on the edge finder. I think it was at one point. I'm not sure if it still is. Can't see it on bullish. It's not on the bearish either, so it's not really reading anything. So I don't pay attention to neutral assets on edge finder. I only really care if it's bullish or bearish, because obviously I'm not going to trade something that is neutral. So we can have a look at gold. Let me just go here. So gold, I'm looking for higher prices, to be quite honest. I think as we are heading into US elections, we did also see a slight rise in tensions in the Middle East. So you can see that's what caused the sort of lift off around here. So it was, the start of, well, I guess the end of July, we did see quite a nice move on gold that was driven by some political fears or global fears. But I'm not sure from here where we go, to be quite honest with you. I'm not sure that gold's ready to go back to all-time highs or break all-time highs. I do expect a slight pullback, and then we could potentially come back and retest all-time highs and potentially break through there. But yeah, right now we are sort of testing this level of resistance, and if this candle, this 4-hour candle closes bearish, that would give me a nice sign that we could come back and sort of retest this 50% level, and then see a continuation up. So that's what I would be looking for. So as we go into sort of next week, I may place a trade something along these lines if we can get this pullback. If not, if we do see this continuation to the upside, then the plan of action here is to enter on this retest. So I'll delete this one. So it'd be something along these lines. Stop below this little this low here. In terms of a take profit, I don't really like trading all-time highs because I like to have quite clear levels of structure to place stops and take profits at. However, in this situation, I would need to take just a trailing stop approach, which isn't my favorite thing to do because it means managing the trade too much. I like to set trades and just leave them. And the way I would manage a trade is by paying attention to the economics. So if the trade thesis or the reason for the trade changes, then I'll close out, regardless of the price action, really. So having to monitor it and trail stops below previous lows and stuff is not ideal for me. But if that's what must be done, then that's what must be done. Sell now. That's a bold thing to claim. I may do, if we see this candle close bearish, I may go for a very small position, just possibly a 1-to-1 or a 1 to 1.5, just to maximize market moves. But again, that's kind of counter trend trading. It's not my favorite thing to do. But if the technicals are there, just for a slight pullback, I will see if I could trade it, but it's very unlikely. I am in a silver position, so this one was sent to the Discord, actually, but this one's been quite interesting. As soon as we entered, really, it was just a run to the upside, which was quite unfortunate. Luckily, the US news today came in quite good for this position. On a technical aspect, it looks really nice. So we are, excuse me, we are looking at this level of previous support. So it's a very clear sort of break and retest pattern. At the time, I was looking at this fib golden zone, and that's where I entered into a second position. So that's running in drawdown at the moment, but still quite happy with the trade. You know, there's nothing really that's giving me any red flags. But yeah, that's it really for my open trades and watch list and things. So yeah, it's kind of a case of just watching these. I'm fairly sure that Euro Pound's going to hit stops today or tomorrow, just as you know, off the back of the what's it called, the rates that came out today. But that's fine, you know. As I said, I like to put trades on, let them run to stops or take profits, and that's just the way it goes. It's not my problem what happens in between. I think when you're paying attention to what happens to a trade when it's not at like a major level, that's when you start letting emotions take over, and what if this, what if that, and that's how you end up hurting your win rates and your risk to reward, is by interfering with your trades too much. Obviously, if it's part of your strategy and that's what you've tested and journaled and it works properly, then fine, and that's part of a structured strategy. But just doing it, you know, out of I think this or if that, it's just not a great thing at all, really. So let's see if there's anything else. UK 100. So I am looking to go short on the FTSE, and the reason is because I really don't like the UK. I think the economy is going to crumble. I'm not sure when. However, I do see that happening sort of towards the end of the year. So yeah, it's a case of waiting for the FTSE to become at sort of a reasonable level to take a short. I think it might be there. Again, if we can see a weekly candle close bearish, may take a very small short position on the FTSE. It may just be something like this. So it's only a 1 to 2, but on longer term positions, I like to take increased risk. So I may take this at sort of 2 to 4% risk. So it's actually a, you know, maybe a 1 to, well, I guess it would be a 2 to 4 or something like that. But yeah, the UK is just in a really tricky spot, to be quite honest. And I've been saying this for quite some time now, and I'm sure the A1 people are sick of hearing me talk about it. But I just think the economy and the way that citizens are living here, it's just not sustainable. People can't afford to eat. There's regular people, teachers, they're going to food banks. There's a huge energy crisis. Everything's privatized. So, for example, actually, I take the train quite a lot. And the reason I take the train is because it's easier. It's more convenient for me. I'm not sure if my camera was off, but for example, I'm going away for some family event tomorrow, actually. So I was booking a train ticket, and the train that I normally get it used to be anywhere between sort of 30 to 40 pounds. You know, that's fine. Who cares about that? I was booking it today. It's gone up to 90 pounds. So it's over doubled in price, and it's the same journey. Nothing's changed. So it's just small things that you may not think about, but all these small costs are what people have to pay every day to get to work, to eat, to stay warm at home, to pay rent. All these types of things that build up, and there's just a lot of people struggling here, and I think that's really going to come into effect pretty soon, to be honest. So enough of that ramble. So yeah, I'm looking to short basically the UK. So I'm looking to short the pound dollar and the FTSE. But yeah, the execution on that isn't quite ready, and I may have already missed it. So I'm looking for this previous high up here at the 1.31 level. However, we are seeing a really strong move to the downside on the weekly chart now. But this level here just wasn't really convincing enough. If we look back, it just doesn't really line up with anything, which to me isn't great. So I like to buy and sell from levels that have some sort of meaning. And this one to me at the 131 just made more sense. So we'll see if we can come back up there. And again, with the Fed cuts that come in September, or likely to come in September, then that may present the opportunity to see a higher price to allow some short positions to get executed. I live in the UK, obviously. So I live in London. So I used to live in the north, and then I moved to London for work back when I was younger, and I just haven't left since. But it's difficult, you know. I wouldn't, if I was still working where I worked, you know, I was 19 and at the time I was on about £30,000, which is good, especially when I was 19. That was really good money. But don't get me wrong, I wasn't living crazy. In London, the rent prices are nuts. So I was living in just a house share, but it was low cost. I think I was paying about £500 a month for bills and rent. So I was living quite okay for a 19-year-old in London. But if I was still there with that salary, I don't think I'd be doing well at all. Sorry, when I say there, I mean the job. With that salary, it'd be awful. Bearing in mind that's above the average salary already in the UK at 19. The average salary I think is about 25,000. So that's just to put into perspective how difficult things can be for the average person. How old am I now? 26. So pound CAD. Sorry, I know I went off in a bit of a tangent there. I've got a bit of a habit of doing that, but I think having an understanding about the countries and the way things actually are for regular people is very important, because it's all very good and well me looking at, for example, New Zealand and saying they're in a double dip recession, but I don't live there. I don't know how people are living. I don't know what it's like to be there and spend money there and have an income and things. So I can look at it from a data perspective, but that's just doing what all the other economists are doing. Whereas I actually live in the UK, so I have a feel about how things are, and I'm experiencing it firsthand. So I hope that makes a bit more sense. Last thing I'll say about this is if you look at the majority of reports that come out from institutions, a lot of the time, reports that will be covering the yen or the pound or the dollar, they'll be written by people from that country or that live in that country. And there is a reason for that. No, that's obviously not in every situation, but anyway, we'll move on. So pound CAD, let's see. I actually don't mind where price is right now. So this is not ideal. However, it's not too bad. So we have this level of support through here, which could be quite a nice break and retest to the upside. This level right here would be a 50% pullback, but the 200 moving average seems to be holding quite well. So to me, I'd be quite happy to go into this, but the stop would need to be quite tight, quite large. So it needs to be just below or just at this low here, with a take profit up at the fib extension. Excuse me. Now I know I was saying I'm bearish on the pound, but I think short term the pound actually does have quite a lot of steam. So for the next sort of 1 to 2 months, I don't really see any problems with the pound coming up. But obviously, again, that'll kind of depend on the rates that come out in September. Cost of living increase here in New Zealand. Yeah, exactly. So if you're in New Zealand, I'm sure the economy and the New Zealand dollar makes a lot more sense. The way it moves and what it does, it makes a lot more sense to you compared to somewhere you don't live. So whether it be the dollar or the pound or the Swiss, something like that. Thrilling history. I've already covered silver, but we can take another look. So I am short silver, basically just off this level of previous resistance here, turn support. And then we've now come into a downtrend, creating lower highs. Looks like a break and retest. Didn't quite respect this fib level. However, this move here was obviously a risk aversion move. So when we had the Middle Eastern tensions rising a little bit the other day, we did see commodities start going up. So we saw oil, gold, and silver start rising. And then we had US news today, which has given us a little bit of a push to the downside on silver and gold. So that's my view at the moment. Yeah, I should have really waited. And earlier, I don't know if, maybe people weren't here, but I was saying earlier, I don't really like to enter into consolidations. And this is actually a great example why. Because when we have a consolidation, it's not uncommon that we see quite an aggressive move out of consolidation. That could be in our favor, it could be against us, but that aggressive move out of consolidation, often I don't really like to be involved with. I like to see the continuation first and then a pullback and then an entry rather than this sort of consolidation. But, to counter that, as I said, this consolidation here had an aggressive move to the downside. So that one would have been great. But it is what it is. We're in the position, so we let it run. Let's Let's see. Let's have a look at the indexes. So the dollar's moving higher. The dollar's doing really well today, actually. Yen is running out of steam, it seems. So as I was saying, I'm still bearish on the yen overall. However, I do see potential for further upside. We are at this level here, so it's quite a nice weekly level. So we can see we had a low formed here, used as support, broken through, and now, you know, from just a technical look, this could be a break and retest. I don't really like saying it's a break and retest because obviously this is basically 100% dependent on what news is coming out of the BOJ and the MOF. But, you know, so far we're seeing quite a nice rejection off this level. So this could be a turning point back to the downside on the yen, but we'll see. We are also seeing this daily candle have a little bit of indecision to favoring the downside, but nothing too crazy. The pound heading to the downside, Australian dollar seeing downside. So it just seems like the dollar's doing pretty well today, outperforming a lot of other currencies. Actually, the Swiss is doing really well as well. Interesting. But yeah, if you guys have questions, please feel free to ask. Shorey, I'm new here and it's refreshing to hear someone speak about trading like this and not crazy strategies like FEGs, silver bullets, and all the noise we see from other traders. Yeah, so I really don't want to go off on another tangent because I don't know if you guys find it boring or not, but I think there's a very simple way to look at trading and strategies and things, and it's why do strategies work and how do them, well, sorry, I should rephrase that. Why do the markets move? And the markets move very simply because of money coming in and coming out. So you've got to think, is money coming into the market because there's a 1 minute order block or an FVG on NASDAQ? No, it's not. Money's coming into the market because there's inflation, GDP, there's all these economical factors that run the markets. And when large market participants are looking to place trades, they're not looking at technical analysis. They're looking at what's the current data for each economy? How can we capitalize on that data? Is that data going to change? Is that data going to change for the good or the bad? And they essentially assess everything. So why would you go against what's proven to work is the point. So let me just pull something up for you quickly. So this is a bank report. So we get these in the Discord every day. And this is basically, we get hundreds of these basically every month. We normally get anywhere between 5 and 10 a day. So you can see it's all economics. There is no mention of price action or technicals. The only real thing that most market participants use on a large basis is moving averages, trend lines, and oscillators, and that's about it. I was long AUD NZD yesterday and got wiped out. Support didn't hold. Yeah, well, that's bound to happen, to be honest, with the current situation with the Australian dollar. What's better in your view, breakout trading or breakout and retest, since both have merits? To be honest, both do work. So I used to have an EA, which is expert advisor. So it was a robot that would trade for me, and it would trade breakouts. So the rule was, if it finds so a very similar situation to this. So if it finds, I think it was 8 or 10 candles that are equal in height, give or take, I think it was 2 pips, something along those lines. It was a long time ago. And then that support level is broken, then it buys or sells, obviously, depending on which way. And that worked, but it was just not worth keeping open because it would fail in situations like news and sessions. So it would normally work quite well in London session, then New York session, it would break down. News, it would also break down. So it was a bit unpredictable. It worked enough, but it wasn't something I wanted to keep going. However, breakout and retests are basically what I trade now. So you can see we're looking for this level of support. We've seen the breakout. and looking at this retest to the downside. And the reason I like retests is because we have shown that there's buyers in the market or sellers in the market to push price below or above that level that I'm interested in. And then we come back down to retest. And a retest normally, obviously, if you wait for a confirmation and you have like something like a fib or a moving average or a engulfing candle, something else to layer on top of that to confirm it's not just a false breakout or whatever you want to call it, they can be quite good, quite lucrative to trade. Can you look at US 30? Yep. Do you think GU is set to drop at least? I'll have a look at GU in a second. I'll also have a look at the dollar Swiss in a second as well. So US 30 obviously was impacted quite heavily by the news today. But I would still like to go long. I mean, if we look overall, we still have the 200 and the 50 moving average holding quite nicely in this uptrend. They're fanned out. I would like to see a pullback into this level somewhere around here. So we've got this low, obviously respected this 50% level. As I keep talking about that level. It's quite a strong confluence to use. We also have the highs down here, this old resistance. And actually we do have, if we just extend this a little bit, we've kind of got this level here as well. So the previous highs. So I'd like to go long from somewhere around here. In terms of a target, I'm not too sure. So I'd have a tight stop, I think, just below this 50%, which isn't ideal. Normally I would go below, so something like this. However, I don't really want to have such a large stop. So I think I would possibly just have a stop here below the lows, below the moving average. And if those are broken, then fine, the trade idea is out of the window, technically. Take profit up at this fib extension, which is the negative 0.618 level. So that's how I would approach it. We also have a bullish reading on the edge finder for the Dow, which I can show you in a second. Let me just log in. That's strange. It won't let me. I think my edge finder might be frozen. But you can see easily here, Dow is bullish. Got a score of 8, so that's also a nice confluence to use. So yeah, Dow looks quite nice to the upside, but the way I trade, I would need to see this this candle close bearish, and then I would need to see a bullish engulfing candle. So really, the entry would probably be a bit higher, obviously to account for the next candle close, which might be bullish, and if it is, that's what I'll enter. So I'll have a look at GBP USD again. So you're talking about which level were you saying? The 1.2635. Let's see. I don't see that level being hit. And the reason is because we've got the daily 200 moving average, which is above this level now. Let's just see. We are seeing a little bit of a rejection at this golden zone as well, which is also in line with these previous highs. So from a technical aspect, I don't really see that happening. It may come down a little bit further and it may tap into this range, sort of this area that you mentioned, but maybe not that exact level. So we'll see. I think it will depend on how this daily candle closes. As I said, I do see the pound as having a little bit more strength at the moment, especially, a little bit more weakness at the moment. So it's definitely possible, but I wouldn't bank on it. Fundamental take on the dollar Swiss. Let me pull that up. I'm not sure if I've got a fundamental take. Dollar Swiss, yeah, I do. So I've read this before. I'll read it one more time. Another rate cut and dovish forward guidance from the S&B have altered the Swiss rebound. Persistent political risks in Europe and global uncertainties could challenge the Swiss in the near term, while lower inflation differentials will depress the Swiss real valuations in the long run. But this is a 6 to 12 months outlook. So keep that in mind when you're with that. Just take it with a pinch of salt for now. I don't use the ATR for an SL. I just use market structure and the fib. Andrew Bailey literally telling off Labour like a child who spends too much money. It's so sad to see. Thank goodness interest rate dropped today so I can sell my house and move to Italy. Yeah, I'm looking to get out of the UK ASAP, actually. Just waiting for a few things in personal life to line up, but I would like to move to South Korea. So my girlfriend is looking to become a teacher there, to teach English in South Korea. So that would be amazing, actually, for me to move there, to get out of this horrible country. But I think we'll call it a day there. If there is any final questions, let me know. Last thing, I just want to do a little self promo here. The Elite Traders Discord was $100 a month. We've lowered it down to $49. It's a little promotion we're doing. So if you guys want to join that, if you want to come and speak to me in Discord and join a bit of a community, feel free to do that. But I think we will end it there. So I appreciate you guys as always. You've been a great chat. You won't see me next week, and you won't see me tomorrow. So I hope you all have a great week ahead. Enjoy your weekends, and I will see you all very, very soon. Thank you for tuning in.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.